Hello, my name is Edwin Martinez from Focal Wealth Management. Again, thank you for coming back and chiming into another video. Again, what we want to do and what I want to do is add some value to what you're doing financially. Hopefully entertain a little bit, not bore you too much with the financial stuff. But we want to make sure that you're on track to meet whatever your financial goals are: retirement, wealth accumulation, insuring your family, whatever it is. Provide some current events from time to time. Let you know what's going on. What we hear. We're on conference calls all the time with different portfolio managers, so on and so forth. But as far as current events, here we are. It's September, the week of September 20th, 2012. Just want to give you that date for current events. The stock market is up pretty good this year. S&P 500 is up about 16+%, depending upon what day it is. But that's not a bad return for a year. Last couple of years, the market's not done too bad. Of course, we all remember the tragic years. The banking crisis that happened a couple of years ago. Of course, September 11th. We get tied into these two bad years, but then we forget about the other 8 or 9 years that weren't too bad. But anyways, I want to be here to add some value to what you're doing. Again, the market's doing fairly well. Is it right for everyone? I don't know. Talk to your advisor and see if it's right for you. But anyways, based on what's going on today, bond returns, if you're not a stock investor, but you're a bond investor and think that there's some safety there, be careful. Bond returns in traditional bonds are less than 2% yield on a 10-year treasury bond. That's not very good. Stock investors, I think, will continue to come back to dividend-paying stocks. And the reason for that is, what are your alternatives for interest? Again, bonds, 2% for a 10-year bond, not all that great. You go to your local bank, your money market's probably paying 0.1, 0.2, maybe 0.5%, depending upon where you bank. A 1-year CD, is it at 1%? I don't even know. I stopped checking. But nonetheless, we think stock investors are going to come back to dividend-paying stocks. Even with the financial headwinds that we see every day. Of course, what's going on today, Europe's a mess. China's possibly slowing down. Although it is 6% growth rate, we'd be dying for that here in the U.S. Of course, Asia is a mess with all that's going on there. The Middle East, of course, we had the terrorism of the couple of embassies over the last couple of days, still going on now. But nonetheless, I think that what we ought to consider doing is, and what I'm doing is, I'm keeping my money at home. I'm buying good U.S. companies. I'd rather have my money here than anywhere else in the world, to be quite honest with you. There's some people who think a little differently, but that's okay. I'm just giving you my opinion. It's just my opinion. But again, what's right for you? Again, you think that through. Talk and speak with your financial advisor, your coach, and again, you guys come up with a game plan. But I wanted to give you a couple of ideas today. A couple of companies that I thought were pretty interesting when I started to look at the numbers. Here's 3 or 4 or 5 of them. JP Morgan Chase. Of course, we know who they are. Their stock has done very, very well, going back to the financial crisis a couple of years ago. But here's, more importantly, is they're kicking out a yield, a dividend yield of about 2.9%. Their symbol is JPM. Again, 2.9% on a dividend, so you're getting paid a little bit while you're holding that stock. Hopefully the stock price is going up for you while you hold it. GE is another company that is doing very, very well. General Electric, their yield is about 3%. Symbol again is GE. Procter & Gamble is at 3.2%, the dividend yield. Procter & Gamble's ticker symbol is PG. Johnson & Johnson is at 3.6, ticker symbol JNJ. And AT&T, of course, today, if you're watching, Apple iPhone comes out today. That's always an interesting and exciting event for the Apple folks out there. Of course, AT&T no longer is the only carrier for the Apple iPhone. However, their stock has done very, very well over the last couple of years. And check this out, their dividend yield is 4.7%, which is huge for an S&P 500 company. So, again, getting a little income while you're getting some stock appreciation, hopefully. Past performance is no guarantee of future performance. But guys, take a look at these companies. Again, talk to your financial advisor. Don't just take my recommendation. They may not be right for you. You got to take into consideration what your risk tolerance is, so on and so forth. The basics of investing. Just wanted to throw a couple of names out there for you. However, if you are a stock investor or thinking about buying stocks, there's a couple of things to keep in mind. You got to set some criteria for buying stock if that's what you plan on doing. You want to buy companies that you like. Think about industries that you like. Industries that you think are important, industries that you think will continue to do well. Other criterias, you might want to look at specific price to earnings. Maybe the 6-month moving average might be important to you. But of course, price shouldn't be the only criteria. Again, invest in industries and companies that are familiar to you. So if you shop at Target or if you shop at Walmart, if you like Pepsi, whatever, these are companies that are familiar. Don't buy some stock with some strange name that your neighbor told you about or some coworker told you about. I'd stay clear of those things because that's really speculation. Of course, don't ignore them. Might be some good stuff there. Talk to your advisor, your financial advisor, and see what he or she says. If you don't find anything that's interesting to you, stay in cash. There's nothing wrong with cash, other than you're not getting paid anything. But cash is a position and appropriate for some of your money. Again, once you buy these stocks, follow them. Don't watch them every day. You'll drive yourself nuts. Leave that to your advisor. But watch them every week or every 2 weeks or even every month. But don't go too long of a period without checking up on your stock, see how it's doing, read a little bit of news about it, so on and so forth. But then be disciplined as to when you're going to buy, when you're going to sell. Set some criteria. So if your stock drops 10%, 15%, 20%, you set the number that's right for you, or work with your advisor to figure out what that right number is. Sell it. Because the last thing that you want is you buy a stock, all of a sudden it's down 40%, something happened in the world, and you're kicking yourself. Set some disciplines on the upside and on the downside, so get rid of it as well. Don't be too greedy, and that's where people get burned, on the upside as well. So set some disciplines, set some numbers. So if a 15% gain or a 5% gain or a 10% gain, whatever your magic number is on the upside, sell. Don't be greedy. Because in the end, if you're too greedy, buddy, you're going to get burned. Anywho, very important. Again, companies that I've mentioned, just some ideas for me, not necessarily for you. Talk to your advisor. Past performance is no guarantee of future performance. Again, these are not recommendations, just a couple of ideas. Anyways, you got to do what's right for you. There are tons of folks out there who need help. There's a lot of people out there wanting to help. But anyway, set some rules, be disciplined. Anywho, fun facts, of course, 7,600 Americans are retiring every day. Maybe one of you out there. And let me take that back. 7,600 Americans are turning 65 every day. Retirement ages are changing. But again, there's a lot of people out there who need help to make sure you have enough income in retirement, make sure you have enough money saved for retirement if you're younger. But anywho, a couple of other interesting things. I think I mentioned it early in the video. The Apple iPhone comes out today, so don't go to the Apple store unless you're willing to stand in line for the next several hours. Wait a few days. I don't understand the excitement. I couldn't get behind camping out just to buy a cell phone. I'll wait a couple of weeks. Hopefully the price will get a little bit more attractive in a few months, really, when I start looking at it. But nonetheless, and also, fun news for all my NBA fans out there. Today, the New Jersey Jets move into their new arena. I think that's exciting. I'm sorry, the New Jersey Nets, not the Jets. New Jersey Nets move into their new arena today. Not that I'm a Nets fan. I like Jay-Z, and of course, I know he's got some influence there. But I'm an Orlando Magic fan. Not a good time for us. We lost Dwight Howard very recently. Dwight, if you're watching, buddy, we miss you already, even though the season hasn't started. But I'm looking forward to seeing you on TV. Hope you do well. but when you play the Magic, I'll be cheering for the Magic all the way. Anyways, tune back in from time to time. See you next time.